Hello traders and welcome to another video review. Today is Tuesday, 21st of December 2021. Let's take a look at the Forex calendar. We got some monetary policy meeting minutes from the from the Reserve Bank of Australia. So we are going to definitely talk about Australian dollar today. And during the London session, we got trade balance from Switzerland scheduled for release at 8 o'clock. GFK consumer climate, as you can see, already released at 8 o'clock, minus 6.8% versus minus 2.6%, which means the consumer climate is deteriorating drastically in Germany. Public sector net borrowing data from the UK has been released at 8 o'clock, and the net borrowing is increasing to £16.6 billion. As you can see, this is everything for the London session. During the New York session, we got retail sales data from Canada scheduled for it at 2:30. Current account from the US, scheduled for this at 2:30, and the new housing price index. At 4 o'clock p.m. there is a consumer confidence data from the Eurozone scheduled for release as well. So we will see if the consumer confidence will match the consumer climate in Germany. Kind of an interesting data to see what is the current sentiment in the Eurozone and in the biggest economy in the Eurozone, which is of course Germany. So what we are going to talk about today, I guess we would start from Australian dollar. Daily time frame chart of the Australian dollar looks kind of solid, but this is the solid look only for bears. A recent bounce from 6,992 was kind of interesting because the market has broke above the 7,171 pips technical resistance, made a new local high at the next technical resistance levels at 7,224, and then after the pin bar kind of a candlestick pattern was made, the market reversed lower. As you can see, recently we just made a local low at the level of 7,083. It looks like right now the market will be consolidating around these two levels. In one hand it would be 7,107, in the other hand it will be 7,171, because this is the narrow zone, and when the volatility dries up, it might be kind of a longer period of time, like a week or maybe two, before this down move will be continued lower towards 6,992, and then of course even towards the level of 6,926. So please keep an eye on the Australian dollar. Let's take a look at the New Zealand dollar as well. Why not? New Zealand dollar outlook on the daily time frame chart looks bearish. The reason is that every time we have a bounce, even after the key technical support 6,753, even then the daily time frame candlestick is still full of upper wicks, and the recent low was made at the level of 6,698. The bounce was towards the level of 6,838, so it's not even the bounce towards the key short-term technical resistance located at 6,857 and 6,880. So please keep an eye on the further development on the New Zealand dollar towards the next technical support. Apparently, I need to first put it on the screen. And the next technical support is way below the 6,753, because the next technical support, as you can see, the really important one is around this level. This level here is 6,500 pips. So we need 250 pips more. This is the next target for bears. Those lines are not applicable anymore, and this is the current outlook for this New Zealand dollar current situation. So please keep an eye on lower levels on the New Zealand dollar, despite the extremely oversold market conditions. Let's take a look at the silver market now. The spot silver market, as you can see, is hovering around the key long-term technical support, which is around the level of $21.84, $21.39 per ounce of silver. The recent channel has been violated, and right now, for the fourth time, this level is being tested. Of course, so far on the smaller time frames, we still have a bounce, especially after this hammer-like pin bar was made on the 15th of December. The bounce is still very shallow, and we might hit the technical resistance. The nearest one is, of course, at the level of 22.96. The other one is at the level of 23.48, and then of course we can see some technical resistance at the highs of the November at 25.37. The market situation regarding to the momentum is negative as well. The momentum is at the level of 43, which is below the level of 50, which is the neutral level. So bears are now in charge of the silver market, and they might soon continue the down move. Okay, so let's put some Fibonacci retracement in a case bulls want to give some relief rally. Bears wants to give some relief rally to the bulls. There you go. 38% is 22.91, which is very close to 22.96, the key short-term technical resistance. So please keep an eye on this level. Right now we are out of this channel, so we don't need this channel actually anymore. This last swing down must be closely observed in order to determine the further market moves. My analysis tells me that this market move will be to the downside, especially after 21.39 is violated. Market might really accelerate the move to the downside way lower, below $20 per ounce. So that was the silver market. Let's now take a look at our favorite market, of course, which is S&P 500. The S&P 500 made an all-time high at the level of 4,551. So this is right now our level of the for the Fibonacci measurements, since then retraced 50%, bounce back up. This might be a pattern called double top. This might be a double top. The level of 4,751.52 had been rejected twice already, so that might be a double top, and we might see the market moving lower towards 50% of the Fibonacci retracement, 4,511, towards the technical support, 4,488, or even 61% of the Fibonacci retracement at 4,455. So please keep an eye on this retracement. Right now, it looks like we are already below the level of 50, which is the neutral level, and there is quite some way towards the extremely oversold market conditions. I guess that level of 4,423 is not even this level. That would be the extremely oversold level. I guess 4,300 might be considered such as. If we take a look from a bigger perspective, we can still see the market is moving inside of the channel. Let me just extend this channel a little bit in the future. There you go. I'm not touching the upper line. However, we might do something like this. If we might, so that secondary point of the attachment is somewhere here at the heights of 4,555. So right now, this channel looks like this, and if we look closely, we could easily see that this is almost whole 2021. This whole movement inside of this channel, a little bit outside, of course, at the end of the November. This is all 2021. So 2021 is definitely the uptrending market, the uptrending S&P 500. But as we know it, sooner or later there will be a correction. But for now, the market, despite the recent drop, the market is still in an uptrend. Might be a double top, might be some kind of a deeper retracement, but as long as we are trading inside of this channel, this market is going higher, S&P 500. And last but not least, let's take a look at Bitcoin. The Bitcoin is bouncing a little bit towards the short-term trend line. However, it's still below 48,766, which is the current nearest technical resistance for this market. Any breakout above this trend line would open the road towards 53,228, which is the key technical resistance level in the short term, and of course towards the test from below of the blue trend line that you can see exactly here. This blue trend line is kind of it's a little bit longer one, and it's a key trend line for the success of the bullish bounce. Any breakout above 53,228 will be considered bullish, and any breakout above 59,528 will be definitely an attempt to rally towards the all-time high located at $68,959. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.